So far, there's been a lot of ups and downs in the stock market this year, or you could say the volatility has increased quite a bit. This is something we actually predicted last year and put a video out on our website to show how we were going to adjust client portfolios accordingly. But I still wanted to create this video to give you some information on what causes this volatility, and so that we can know if these changes are long-term trends or if it's just short-term noise. Hi, I'm Matt Rosenberg with RoseCap Investment Advisors. Investing in stocks is kind of like raising small children. One day they'll do something totally remarkable, like learn to play a piano song by ear. Where did you learn that? Or go flying down the ski slopes like the next Olympian.
Hey, make some turns!
As parents, we see this and we think, my kid's a total prodigy, the next Mozart or future Olympian. But then the very next day, they're doing something totally disturbing, like eating dog food for dinner. Hey, sweetie, the boys are eating the dog food.
Wait, why are you even filming that?
That's funny. And then as parents, we think to ourselves, where did we go wrong? And what's wrong with our kid? It's quite an emotional roller coaster. Well, people exhibit the same behavior when it comes to investing in stocks. One day the market's going up and everything's great. We're all gonna retire multimillionaires. Then the very next day, the market sells off and people start worrying about, are they gonna have enough money during retirement? Are they gonna be sleeping under a bridge one day? So I wanna give you some information on what causes these short and long-term swings in the market, and then if there's gonna be a correction or a sell-off soon. And then finally, I'll give you some information on what you can do to not worry about this as much. Stocks are really companies that sell goods and services to try to make a profit. People invest in stocks because they want ownership in those companies so they can have a share of the profits. So naturally, anything that changes people's expectations of what those future profits will be factors that will influence the long-term expectation for stock prices. So let's take a look at what some of these factors will be. Here's a very simple P&L. As you can see, it's just sales minus expenses equals profit. Now, let's say interest rates, which have been very low recently, actually go up. Well, that's more expense for a company, which would cause the company to make less profit, and we could expect stock prices to go down as a result of that. Or you could have a change to taxes like we just saw with the tax reform change, which will take place in 2018, where taxes are now going to go down for a company. This means they'll make more money, and we can expect stock prices to go up as a result. It really isn't any more complicated than that. Note that interest and taxes aren't things that really change a lot from day to day. So why all the short-term market swings? Well, that's really the parents who are way too focused on their kids' behaviors from day to day, thinking they're either going to be prodigy or Neanderthal based on what they did that day. The reality is it's probably going to be somewhere in the middle. So what do you do when you hear market news or expectations about extremes? Well, I'd probably just ignore it, just like you would a parent who was bragging about how their 5-year-old is going to play Division I football. Here's a few more things to consider though. First, US stocks are not the entire market. Focusing just on the US stock market would be like focusing only on one of your kids' activities. Just because they're not good at baseball doesn't mean they're not going to be good at math or science or art. And just as you should diversify your kids' activities, you should diversify your investment portfolio to include other asset classes, like international stocks, bonds, currencies, and commodities. Having a properly diversified portfolio relieves you of having to worry about the performance of just one of those asset classes. There are other basic things that you can do to give yourself a higher probability of achieving your financial goal, like minimizing taxes or fees, or avoiding gimmicky investment products, or using life insurance as an investment. These are the basics like brushing your kids' teeth or feeding them healthy food that they don't guarantee success for you, but they'll definitely give you a much higher probability of it. Raising kids can be really tough. Having a responsible investment portfolio can be too. So most importantly, I'd recommend finding the help of a financial advisor. And then when I say advisor, I don't mean a life insurance agent or a broker who can sell commission product and operate with a conflict of interest. I mean an investment advisor who has the qualifications to know what's in your best interest and the fiduciary obligation to act in accordance with it, like RoseCap Investment Advisors. Have a good day.